Is Cathie Wood's ARK Invest really ahead of the curve when it comes to picking stocks? Well, today, my AI assistant Tiara and I are going to explore Cathie's stock picks, and I'll actually show you exactly what AI thinks about her investment strategies as well. I'll also make sure that we cover one overlooked tech trend that Cathie has been exploiting for big returns that you honestly may want to copy yourself. So Tiara, how should we go ahead and get started here?
Let's look at the overall portfolio composition.
Okay, that's definitely a good idea, thank you. So ARK Invest's portfolio is quite diverse and focuses mainly on sectors that are expected to grow huge with disruptive innovations. So as of the latest data that I could find, ARK holds a total of 187 positions with a market value of approximately $10.93 billion. The top sectors represented in ARK's portfolio, they include technology, that's the largest sector. And that includes companies involved in like software, hardware, and digital services, with positions also in companies like Tesla, Shopify, and Coinbase. It also holds healthcare, which includes biotech and genome companies that are innovating in areas like DNA sequencing and personalized medicine. And lastly, consumer companies, which often benefit from changing consumer behaviors and preferences, things like Shopify and Roku was another one. So most of ARK's investments, they are concentrated in the United States. However, there are some international holdings that align with their whole innovation theme that they've got going on. And while ARK's focus on disruptive innovation offers significant growth potential, it does have its own set of issues as well. So Tiara, what do we go to next here?
Let's get into the risk and volatility assessment.
Yeah, that makes sense. And while ARK has had some great performance at times, innovation isn't without risk, and neither is the portfolio of the company. So understanding the risk profile of ARK Invest portfolio is crucial for anyone considering an investment in their ETF. ARK's portfolio is known for its high risk, high reward approach, and the numbers really back that up. So for instance, the maximum drawdown for the fund has been negative 77%. That means that at its lowest point, investors who bought at the peak would have seen their investment drop by 77%, which is kind of unheard of for most ETFs. And there's also a metric known as beta, which measures the fund's sensitivity to market movements. And this shows a high correlation with both US stock market, which is at 0.86, and the US technology sector, which is 0.80. This means that when the market moves or the tech sector moves, ARK's portfolio tends to move even more dramatically in the same direction, which is great if things are going well, but even more painful when things aren't. But despite the volatility, ARK's long-term performance has been pretty impressive. Since its inception from 2014, the fund has grown from $1 to $2.48, yielding a total return of 147%. So even after adjusting for inflation, the net total return stands at about 87%. So now that we've unpacked the risk and volatility assessment of ARK's portfolio, you might be sitting here wondering, well, does the risk actually pay off? And my answer to you is, well, Tiara, does it?
There's a lot to unpack here. Let's dive into a performance analysis.
Yeah, and I can't imagine a simple yes or no really makes sense here, though you are supposed to be kind of an all-knowing being who is never wrong, so...
Yeah, well, I have to dumb this down for all of you humans.
All right, whatever, Tiara. Let's just talk about ARK's performance, okay? So up to November 2024, they had a return for the year of 10.71%. And when I saw that, I had to laugh a little bit because even though Cathie Wood has over $10 billion in assets under management, I completely smoked her performance in 2024 by a large margin. And you can actually see those numbers yourself in another video that I published recently where I let AI really roast my stock portfolio. And I'll link to this later in the video for you. But getting back to ARK Invest here, so if we zoom out a bit, things actually get a bit crazy too. So over the past year, meaning the 12 months, the prior 12 months of making this video, ARK is up 25.74%. But if we look at the past 3 years, they're actually down by 17.68% annually, which honestly, I'm a bit mind blown by. But then again, ARK, they do invest in high risk, high reward strategies. So maybe they'll have a big breakout soon, we'll have to see. And if they did, it really wouldn't be the first time. So in 2020, ARK was up a mind-blowing 152%. But then in 2021, they took a hit, down 23.39%. 2022, Ouch, they were down about 67%. Then in 2023, they saw a big bounce back, up 69%. So this ETF really is a roller coaster, and it's just absolutely not for the faint of heart. It's tough to see the swings on this thing. But here's the thing, while ARK's been building on this wild ride, the boring old S&P 500, which I've said time and time again that boring can be a great investment strategy, it has been steadily chugging along. So in 2024, while ARK was up 10.71%, the S&P had returned 26.8%. So sometimes slow and steady and boring really does win the race. So now that we've taken a deep dive into ARK's performance numbers, it's important to remember that when you're dealing with a fund that's all about, disruptive innovation, as they call it, sometimes traditional performance metrics really don't tell the whole story.
You're right. Let's peek under the hood and see how aligned they really are with their claims of only investing in disruptive innovation.
Yeah, it makes sense, Tiara. So ARK's, their whole deal is betting big on game-changing innovations. They're not just talking about incremental improvements. We're talking about, technologies that could flip the entire industry on its head, right? That's really what they're focused on. So first up is artificial intelligence. So ARK, they're really big into this overall, and I think for good reason. So let's look at their portfolio here. You see names like NVIDIA, which is basically the backbone of AI computing, but they're not just going for the obvious picks either, right? They've also got some stakes in companies like UiPath, which is all about using AI for robotic process automation. Next, let's talk about genomics. Next, let's talk about genomics. So ARK's been big on this before it was even cool, right? They've got significant holdings in companies like CRISPR Therapeutics. And if you haven't heard of CRISPR, they are basically working on editing DNA, which means, we're talking about potential cures for genetic diseases here, which is pretty mind-boggling, right? Also, electric vehicles and autonomous tech, well, they're all over that, right? So Tesla's been a longtime favorite, but they're also invested in companies like Trimble, which is working on autonomous solutions for agriculture and construction. And ARK doesn't just pick companies in isolation either, right? They're looking at how these innovations actually intersect. So, take their investment in Square, which is now Block. So on the surface, it's a fintech play, but if you dig deeper, you'll see that it's all about blockchain technology and really the future of decentralized finance. Now, are all these bets, paying off? Well, that's really the million-dollar question. So some of their picks have been home runs, while others,
you haven't done and you never will.
Let's just say they haven't really even hit anything yet, but you've got to give them credit for making some really big bets, because the thing is, when you're betting on disruptive innovation, you're playing, the long game. It's not about the quarterly earnings. It's about trying to spot the next big thing before everyone else does, which is what they're really focused on doing. So that begs the question, how does ARK keep up with the breakneck pace of innovation? So I think for that, Tiara, does it?
Let's take a look at their portfolio turnover and trading activity to decide.
Okay, yeah, that sounds good. And and this is where they do get interesting, right? Because it shows us just how active Cathie Wood and her team are in managing their investments. So first off, ARK isn't your typical, buy and hold fund. They're constantly tweaking their portfolio, and the numbers really show it. So on average, ARK's annual name turnover is about 15%. So that might not sound like a lot, but when you look at the individual security turnover, it jumps to a whopping 60 to 75%. So what does this all mean to you if you don't understand all that? Basically, ARK isn't afraid to shake things up, right? They're constantly reassessing their positions, buying more of the stocks that they believe in, and trimming those that might be getting a little bit overhyped. So for example, a few days before I made this video, they sold off a chunk of Tesla shares worth nearly $10 million. And while almost at the same time, they also were buying up shares of Tempest AI. They bought 335,000 shares at about $13.1 million. Now, this isn't just random trading, right? ARK has a clear strategy, and if a stock's fundamentals haven't changed, but its price has dropped due to short-term issues, ARK might buy more. They do that over and over. And on the flip side, if a stock gets overhyped, well, they'll trim their position to take some profits. You see them do that a lot with Tesla, actually. But does all this trading actually pay off? Well, that is the big question here. And it all depends on what year you're looking at, because Overall, the fund, it really is mostly hit or miss depending on the innovations that come to fruition. But Cathie Wood, she isn't phased, right? In fact, she sees these losses as potential assets, arguing that they could offset future capital gains taxes, which I have to laugh a little bit about because while she isn't necessarily wrong, it takes a special type of person to say that losses are a good thing. That said, earlier in the video, in the intro of the video, I mentioned that I was going to cover one overlooked tech trend that Cathie Wood has been, really exploiting for big returns that you may want to copy yourself. Well, Tiara, you want to tell them or should I?
Nah, you can go ahead. I'm busy trying to figure out why a human would say losses are a good thing when it comes to trading.
I get it. I get it. It really is kind of ridiculous, Tiara. Cathie has really capitalized on the growth and the impact of artificial intelligence and deep learning technologies. So while her fund hasn't delivered a huge return yet, she's getting a lot of exposure of AI and deep learning companies in multiple industries, which most would agree is really a smart move right now. Her investment philosophy often involves betting on companies that kind of embody disruptive innovation. And it's clear the age of AI will bring that, right? So kudos to her for getting that right, even if my portfolio actually smoked her this last year here. Which reminds me, I mentioned that I'd share the video where AI roasted my portfolio, and you can see that right over here. But if that doesn't sound like it's for you, go ahead and check out the video over here instead. But before you go, please make sure that you subscribe to the channel so that you can unlock financial success one AI chat at a time. Thanks so much for your support.